our HELOC Combo Loan. So we've done some episodes recently on second mortgages, done some episodes recently on HELOCs and instant HELOCs. This is where we're going to put it all together, a HELOC combo. We always talk about kind of our blended rate and some of the other things that come along with that. A HELOC combo is where we actually put the HELOC second with a first at the same time. There's a few reasons why we would do this. Jose is going to go into some specific examples. This is a tool in our tool belt, right? We always have the HELOCs. We always have regular mortgages. Putting them together is a specific tool that we're going to use for specific situations. So hopefully that prefaces it there for you, Jose. Why don't you let us know why we would use this first, and then let's go check out some rates if you can.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Jose Gonzalez. Happy to be with you today. Great day when rates are going down. That is the trend, right? So let's everybody take advantage of the momentum. And the HELOC combo loans are definitely part of the action because as those rates go down, we're seeing the rates on the HELOCs improve as well. So we do quite a bit of loans in Florida. I mean, that's not the only place we do loans, but obviously we are headquartered in Florida. Florida is the hottest market in the country. Miami has the top capital appreciation in the country, so definitely a lot of action. But if you are in the market down here as a loan officer or as a purchaser, you will notice there's a challenge with the associations not having the required 10% reserve for those conforming loans, right? You got to have at least 10% in reserves for the project to be able to do a low down payment loan. Other than that, you would have to be doing 25% down payment for a limited review condo loan in Florida. Rest of the country is 10% for limited review condo loans. Florida is 25%. We have just that many more condos, right? So the HELOC combo loan allows us to combine the limited review first loan at 75% LTV with the HELOC for 15% for a CLTV of 90%, right? So that's one of the great things we can do with the HELOC combo. And the other thing we can do with the HELOC combo is we can buy, or the borrower can finance a deal with 5% down on the purchase of his $1 million home, right? Normally that would require a jumbo loan if you're going over the conforming loan limits. South Florida happens to be $726,200. So if the borrower was buying that $1 million property, which seems like most of them, that's what they cost nowadays, they would definitely have to come in with a minimum of 10% down plus pay higher interest rates. So we can do a HELOC combo to the Fannie Mae limit of $726,200, combine that with a HELOC, right? And the borrower could come in with 5% down. And then obviously we would want them to get on an accelerated repayment plan to pay that HELOC down, because the beautiful thing about the HELOC is, as an open-ended mortgage, you pay interest on what you owe, right? It's not a set amortization. So it's definitely not in your best interest just to pay interest only, but you really would want to pay that down, and then your interest expense will decrease with each payment, right? So that's another benefit of these using HELOCs. And another benefit of the HELOCs, for example, is you want to do a cash out to a 95% LTV, right? But you know that the cash out limit on the conforming loans is 80%. Well, you can do a HELOC combo, do a rate and term on your first and cash out on the HELOC, right? Whether you need all the cash now or you just want to get the HELOC, draw part of it out and then draw the other part out as you need it. So you only pay interest on what you owe. So 3 good examples of how we can use the HELOC. So let me show them to you. Here are the examples that I have on all of these parameters that we're talking about. So our first one here, and this one is a super popular combination for Florida because, like I mentioned, most of our condos here are not collecting adequate reserves. Some are 3%, 5%, some are zero. So you're just not going to be able to do that 5% down loan in Florida most of the time. I'm not saying all of the time, but most of the time, especially in South Florida. So we we combine a first mortgage of 75% LTV, line of credit of 15% of the amount, so that we have a CLTV of 90%. And added benefit, right? The frosting on the cake here is no mortgage insurance, right? So in some of these cases, at a 95% LTV on some of these prices, your mortgage insurance could be a couple $100, $150, 180 with good credit, and substantially higher than that if your credit score is on the lower side. So no PMI. So that definitely helps out. So here you're looking at 7.5% as your lowest cost option and 6.75% as your lowest rate option. And then if we scroll down here, you will see our HELOC is at 12, which is not bad. A couple months ago, we were looking at 14, 15% on these. So the rates are dropping, right? So this is our 90% CLTV condo killer loan. And now we have another good workaround here is borrower doesn't want to pay mortgage insurance. What do? Well, we get an 80% LTV first mortgage, right? That's the maximum for no mortgage insurance on a conventional loan. And in this case, we're going to take it to the max, right? This 95% CLTV purchase, right? So they're giving their 5% down. They're getting 15% of the purchase is a HELOC and 80% is the first loan, no mortgage insurance. And again, you would be consulting your borrower to try to get on an accelerated repayment plan on the HELOC, maybe make a payment every 2 weeks on the HELOC. There's a lot of strategies out there that really allow you to reduce your interest expense. Remember, it's the compounding of the interest that really gets you in these situations. So you get on that accelerated repayment plan and you will be paying it down quicker and reducing your interest expense substantially. Excuse me. So in this case, again, 7.5% is your lowest cost option. 6.875 is your lowest rate option. And now we have our jumbo killer HELOC combo, right? So this is the one I was mentioning. Buy that $1 million property with only 5% down. Yep, that's not a typo. Right? Perfect workaround for buying your property with a conventional loan instead of a jumbo loan with 5% down. You get that conventional conforming limit first mortgage with conventional conforming rates and automated underwriting. Don't forget about the streamlining of automated underwriting for our conventional loans, which is another big workaround there. You want that 1 year findings or whatever you want. Well, here you go. But you do have to recall, I want to take a step back. When you are doing the combo loan, you do have to be aware that the HELOC is going to have a separate set of underwriting guidelines. So they may not accept your underwriting findings on that first, and you may have to jump through a couple extra hoops of fire for the HELOC, which may require the 2 years for your borrower income instead of a 1 year finding. So here we got 7.49 with a little bit of a lender credit. Look at that. They like those big loans. And you can buy that down all the way to 6.49. That's pretty amazing rates. And then if we go down here to our HELOC, it is a little bit higher because we're taking it to 95%. CLTV instead of 90. So there's a 0.375% higher interest rate. So our $225,000 draw there, 2320 is our interest only expense there. So very good options here. And now our last option, one, this is the one that we love. This one was super popular for us at the onset of the pandemic when we initially rolled out this combo product of the HELOC Combo Rate and Term Refi, combining with the HELOC. So in essence, this is like a hybrid type transaction. Part of the transaction is rate and term on the first, so you get that rate and term pricing. Now, in this case, I used the same setup that I had on my jumbo purchase, so we're only at 72.5% at the maximum conforming loan limit here. But just imagine this scenario with a $600,000 price. You're taking the rate and term to 90% LTV because it's a rate and term. And then you're getting a little added bonus of 5% extra LTV there from a HELOC. So, in essence, making that a hybrid transaction with part of it being rate and term and the other part of it being cash out. So, you're not limited by the cash out LTV, which is maximum 80% on a 1 unit property primary. Right. So, big difference there if you're trying to get that maximum CLTV and not pay the added costs. So here you're looking at 7.49 at par and 6.49 as your lowest rate option to get your rate and term on the first and to get plenty of dough out on that HELOC. And obviously remember the accelerated repayment plan on that HELOC, plus you only pay on what you owe. So if you don't draw out the full 225,000, you don't pay the 2,200 plus every month. So these are four very good examples here where you can combine a HELOC in different ways to gain an edge on the competition and further serve the needs of your borrower.
What's the rate on that HELOC, Jose, for the cash out? There you go. Same.
12.375.
Gotcha.
$225,000.
All right, cool. Great options there. As Jose said, another tool in our tool belt as a loan officer to accomplish those certain goals. So I don't see any actual questions. So I think we can go ahead and wrap it up then. We appreciate everybody tuning in.